Today I'll show you a scalping strategy with an indicator that predicts the future price of an asset by analyzing its past price history. It has proven to be quite accurate in its predictions. Open the indicator tab and search for the echo indicator. Select the version created by Lux Algo and add it to the chart. The echo indicator is designed to forecast future trends of an asset, as well as identify historical price variations that are either similar or dissimilar to the current market conditions. When we look at the chart, we will see three different colors being plotted. The orange color represents the forecasting window, which is the portion of the chart that will be used as a reference for the search for the most similar historical price segment, which is colored in green. The gray area represents the total evaluation zone, and the green area shows the most similar part within this gray zone when compared to the orange reference area. As you can see in the chart, the indicator is predicting that the price of the asset will rise. This is a sign that we should consider entering into a buy position. When we decide to do this, we can place a stop loss at the recent swing low to minimize potential losses. For our profit target, we can aim for a risk-to-reward ratio of 1.5, meaning that we will aim to make a profit that is 1.5 times greater than the potential loss. As a result, we got a profitable trade. Based on the echo indicator, it appears that the price of the asset is likely to continue its downtrend. As a result, we may decide to enter into a sell position. To minimize potential losses, we can place a stop loss at the recent swing high, and for our profit target, we can aim for a risk-to-reward ratio of 1.5. Now, let's see how the trade plays out. It is important to keep in mind that the echo indicator is not meant to be used on its own, as it may provide losing signals when used in isolation. To improve the effectiveness of our strategy, we can consider adding other indicators to the chart. We will select the version created by Mikkel and add it to the chart. Next, we can search for the volume oscillator indicator, select the version created by Tradingview, and add it to the chart as well. These additional indicators can help us create a more comprehensive and reliable trading strategy. To optimize the settings for our indicators, we can start by heading to the SSL Hybrid Indicator settings and clicking on the Inputs tab. Here, we will change the baseline length from 60 to 200. And we will change the baseline type to McGinley, which is a type of moving average designed to track the market more effectively than other types of moving averages. Next, we will click on the Style tab and uncheck all of the checkboxes, except for the bar color and MA baseline checkboxes. Once these changes have been made, we can move on to the volume oscillator settings. We will head to the Style tab and change the colors of the lines. To make these adjustments will help us customize the indicators to fit our needs and preferences. To enter into a long position, the following conditions must be met. The price must be touching the top of the forecast window, and the forecast line must be pointing upwards, indicating that the uptrend is likely to continue. The SSL hybrid indicator should show a blue candlestick, indicating that we are in an uptrend. Additionally, the volume oscillator should show a line above the zero line, indicating that there is sufficient volume in the market. Before entering the position, we should also ensure that the forecast line will hit the take profit level before it hits the stop loss. To do this, we can use the long position tool to map out the entry and set the stop loss at the recent swing low. We will target a 1.5 times risk-to-reward ratio for the take profit. Once we have confirmed that these conditions have been met, we can confidently enter the position. Be careful, sometimes even with all the optimal conditions for entry, the indicator can predict that the price will reach a stop loss, and it is better to avoid such cases, as in this example. For taking a sell position, the conditions will be the same, just from the other way. So, let's take a look at the such case. Thanks for your attention.